Welcome to Markets Now. I'm Michelle Rook along with Kent Beadle with Paradigm Futures. Livestock to the plus side as we move through the mid-session, and grains, which started off stronger overnight and this morning. Well, we've seen a little bit of a setback in corn and wheat. Soybeans still to the plus side, but off their session highs. And so, Kent, what pushed us in the overnight session to the plus side, aside from weather, was the fact that Russia said that they are not going to extend the Black Sea grain deal, but we faded that news. Talk about what the deal, in essence, where it's at right now. Is it a done deal? Is it over or not?
Well, there are reports that the last ship has actually left the port of Odessa. And so, as we stand today, yes, the deal is over. However, I do think that the market has a certain amount of skepticism about that for a couple of reasons. Already, President Zelensky has been in the media talking about the need to maintain grain exports out of the Ukraine, and has talked about Turkey and other Western countries essentially somehow going it alone. Now, of course, that ignores the fact that Russia might actually choose to militarily keep the program from going. But right now, people kind of maybe have some suspicions that Russia is still just trying to get more concessions, and that the deal might benefit them. And if they don't let the deal go through, that some of their wheat exports might not actually go through, or that there could be some sanctions on them in wheat. And so there seems to be some pessimism that the agreement is done, and some optimism that maybe there will still be some negotiation and agreement at some time forward.
Okay, so that's why we kind of pulled back here. But did we also see a little pickup in hedge pressure or farmers selling?
No, I think we did. After the over $1.20 break from the highs, people started looking at old lows, old highs, retracement areas. I think the first area was just underneath 520. And so between 520 and today's highs, I think there was some hedge pressure. I think you'll find more of that if you were to get up toward the 535 to 540 area.
So corn also pulled off its highs when wheat did, and I'm sure corn is getting a little spillover, but also, we've got crude oil down today, and we're still so focused here on the weather. Are those having an influence?
Well, I saw the weather as having a slightly bullish tinge to it here this morning. You do have a fairly sizable hole in the center of the country that's scheduled for less than a half an inch of rain this week. You do have a little warmer, drier 8 to 14 day forecast from the National Weather Service. But I think this has been a model all along where you expect some scattered showers to develop through the belt. And if you look at the amount of rainfall that we've had through the belt over the last couple of weeks, it certainly looks as if that our pollination has probably went fairly well. We would anticipate that crop condition ratings this week, are at least steady, and maybe a little bit better here once again after last week's fairly good jump in corn.
Yeah. And then we kind of ran up into some chart resistance there as well. So we may be off of our highs as a result of that. But, longer term, do you think this market is going to continue to put in some weather premium just on the idea that, these yields may be coming down, even though crop ratings have improved in some areas? They haven't improved everywhere. So,
yeah, well, that's true. And there's definitely been winners and losers through the whole summer, and that hasn't changed. You had northern Illinois got some good rains, prior to the drought being kind of broke, and then we had better rains in southern Illinois and less good rains in northern Illinois. So it just seems to be shifting around. But really, all you need is a few good rains through the summer, hitting everybody at least a couple of times, and we're not. I think the conditions are probably a little bit better than the 55% good to excellent, based on the way things are rated today.
And soybeans holding on to gains. Is that because the meal market has made this move higher here, or is this Still these darn China rumors that kind of continue to circulate.
Well, we were noticing Paranagua basis levels were quite a bit higher last week. I'm not sure that if we're actually competitive for anything beyond or ahead of harvest, but we're certainly competitive post harvest. And if the Chinese are looking at our loss of acres and the lack of rainfall in June and the potential that yields could still in fact come down with not great crop condition ratings, they might want to get some coverage sooner rather than later, because if we don't have a good August, our ability to export could be compromised significantly. And I would also say, given the demand reductions that we saw on the balance sheet last week, I think for both meal and soybeans, we almost need to maintain some higher prices in order to ensure that those lower demand estimates actually get hit. If we have weaker prices, we're almost certainly going to stimulate some demand.
Yeah. And then there's at least a few forecasts that look at the extended models and say, hey, it looks like, we may have some hot, dry conditions coming in into July, going into August. So that market's still going to kind of try to hold some weather premium in here, I would assume.
I think so. Absolutely. August is very important for soybean yields. And, to be fair, it's also important for, filling out ears in the corn. So, the weather market is a long way from being settled at this point.
Absolutely. Cattle market. We made new contract highs in the live cattle futures on Friday on the heels of some better cash trade in the north. We're higher today. We haven't taken out last week's highs, but where do you see this market going this week? Are we going to just be completely pinned to this cash market?
The cash market is always going to be, the first thing that we're looking at. But, we still have some very supportive long-term fundamentals. If we can keep corn prices from rallying too far and the feeder cattle continue to firm, leading the live cattle here a little bit higher. After making new highs, I think the speculative side of the marketplace is likely to embrace at least buying breaks again in the cattle, and more new highs may be shortly in front of us.
What's your thought about cash trade this week? I mean, like we said, the North kind of did have a very strong market last week. I know they're very current, but overall, what do you see for the tone this week?
Well, last week was kind of a wide range of trade in the South, ultimately kind of averaging, 178-ish unchanged. We're looking for that type of level to be, at worst. We think that cash trade could be even $1.02 better this week.
Yeah. And as you and I speak, it looks like live cattle have turned back to mixed status. So we'll see if we hold on to gains into the close today. Hog market, slightly higher. I would call it quietly higher, or I stole your term perhaps. But, are we getting close to on high? Because this has been a cash pushed market. Is that lean hog index just about ready to top or not?
I think the lean hog index is ready to top. We're anticipating that if we haven't made our highs in the cash, that we're going to make them, fairly soon. We still have indications that, there's not an awful lot of space in the barns out there, that supplies are still fairly good. And ultimately here, we should start to see seasonality kick in. Now, to be fair, we had an awful late seasonal rally. Maybe that allows things to extend a little bit further. But you look at the discount of August to the July, certainly the market thinks that we're going to top this index out here pretty soon. And we tend to agree that seasonally we're going to start to tip this market over.
Yeah, and you and I talked about the demand push coming from Prop 12, but also, you've got China buying for reserves now. You've got the dollar pulling back, which should help exports. Is there some sense that China may be buying more from the U.S. or will?
Yeah, my guess is, though, that if the Chinese are going to buy more, it's going to be further out on the curve. We believe that they've been needing to digest some of the ASF inventory that's been liquidated in order to try to keep the disease under control. That's been part of the reason why exports to China have been a little slower than had been hoped for. Now, we did see some Chinese activity in last week's sales report.
Right.
And my guess is if we're going to see Chinese activity, it's probably going to be more skewed toward later third and fourth quarter this year.
Gotcha. All right. Thanks for the update today, Kent Beadle with Paradigm Futures. That is Markets Now.